Are the key macroeconomic ingredients finally in place for a gold rally? Joining me today, Frank Holmes, CEO of U.S. Global Investors. Frank, welcome back to the show.
It's great to be back, Daniela.
Well, happy to have you on. Happy to bring up a recent note from Goldman Sachs, which suggests tariffs from the trade war with China will push inflation higher. How do you see it, and what does this mean for gold?
Well, historically, when you look at tariffs, it's a taxation. And that taxation is going to be picked up by the consumers in America. And so that's going to be inflationary for buying products. And quite often, you get this inflationary that accelerates because it gets layered over several times. When you look at historical dropping of tariffs or increasing tariffs. So it is inflationary.
And as we know, Frank, gold has been a good inflation hedge. So would it be different this time around?
No, I think it's one of those catalysts that push it higher. But more important is the negative real interest rates in Europe, and now the fear with lumber prices and PMIs. So we have global PMIs still tracking lower, and the correlation of lumber prices falling but correlating very high with PMI is usually a precursor to a recession. And now we're seeing rates are much lower than they were in October. That is also a very supporting underbelly structure for the price of gold.
Well,
and you add inflation on that, gold in a New York second is going to be 1,400.
Okay, well, how about this angle, Frank? You know, we're seeing the impact that the tariff war has been having on the dollar. A lot of people viewing the U.S. dollar as a flight to safety right now. So, you know, with the steady uptrend we've seen in the dollar index for the last year, can we not expect this to continue and put downward pressure on gold?
Not if rates keep falling. You know, we're getting close to negative rates here, and we have definitely very negative interest rates in Europe. I just can't understand why the euro is more expensive than the dollar. Gold should be just soaring in euro terms, and that lends that whole idea of suppression. The whole fact of gold suppression, in particular, needs it more than anyone else, is Europeans as they continue to print money. And basically, it's unprecedented that they have negative interest rates so low.
And Frank, I know you've become very vocal lately on the topic of gold suppression and manipulation, and we're going to talk about it in depth next week when you're on. But I'm happy you brought it up because, you know, why do you feel now is the time, or, you know, you've been in the industry a long time. So I guess my question is, like, why now? Why are you being so vocal about this topic right now?
Well, I've written about it many times whenever we get this sort of spoofing of markets. And there's been several cases brought to court. People have been found guilty. Major banks have had to pay big fines. I think the European banks recently for currency manipulation had $1 billion of fines. And my sensitivity towards the Bank of International Settlements, which has all these 60 central banks around the world going up to it, they're very much involved in gold swaps. But they're also very vocal on anti-Bitcoin, anti-cryptocurrencies, exceedingly so. So it just lends itself the way they talk about Bitcoins, etc. There's something more even suppressed the way they talk negatively. But the thought process when I was in Europe was that they used gold swaps to suppress the price of gold. It allows the Europeans to roll over all this phony debt.
Well, I'm happy you brought up Bitcoin because last time we talked, you brought up how only, you know, ignorant millennials will see Bitcoin replacing gold. You know, that interview, you know, had a lot of traction, caused a lot of water cooler talk. And we've had one economist come on saying that gold has lost its luster as a safe haven asset since prices haven't moved on lower equities. So, you know, this debate will keep going on, Frank, right? Of this Bitcoin versus gold. It's not dying anytime soon.
And I don't want to get pulled into the sort of people that have a historical perspective that's since they were born.
But let me ask you this, though, Frank, because one thing that keeps coming back is that, you know, I can't go to the deli with my bar of gold, but I could go to the deli and buy something with Bitcoin. So what do you say when people bring up that point of view?
Well, that's just not true. You know, there's lots of places where you can take your gold and you get 1/10 of an ounce of gold. There's many places in the world. In India, you can easily get food, and it has a population 4 times greater than the U.S. And so I disagree with that. And there's many places you just can't actually use your Bitcoin. What's nice about gold is that the volatility of gold, the stability, you can say, of it, is the same as the stock market. So it's pretty, the 1% is the daily volatility of gold. Same thing with the S&P 500. But Bitcoin's 5%, 6%.
Yep.
So you could really be losing a lot of money with Bitcoin.
I know this debate is not going anywhere anytime soon. Frank Holmes, thank you so much for joining us. We'll see you next week. And thanks for watching. We'll be back tomorrow.